Hello everyone, what's the crack traders, and welcome to another episode of the Tuesday webinar or the market watch list. So yesterday there was a big announcement between Lucid and Aston Martin. Okay, so Lucid is an EV manufacturer who has been in the market for a little while. It's been sort of on the backs of Tesla, NIO, and Lucid. It's one of these companies that has done quite well in before the market correction we've started to have in September last year. So it's one of these ones that are there. They're trying to get into the market, but they're not very successful as a company. Okay, yes, some of their technology is really, really good, but as a company, they're just not very, very good. Okay, so just have a quick look at their charts and what's going on since they sort of IPO'd. What's ever happening here is they IPO'd and then they had that initial run from here, which was just say $10 up to $64. Then it had that massive drop, and then it had another pop back up here to almost the record high, 57. But since November 2021, this is what's been happening. It's just on a downward trajectory. And if we have a look at this at more recent, what's been going on in the last, say, month or two, we have this descending triangle. If we have a look at this and put a horizontal level in here, we have a little horizontal there at that particular point, and then if we get a trend line, we have a descending triangle going on there, and you would sort of expect that to break out to the downside. Now, they have signed a deal with Aston Martin. Now, I don't know if anyone has sort of looked into the ins and outs of this and what it means for Lucid, what it means for any of those. So Lucid and Aston Martin have signed a £450 million deal. Now, this is going to do one of two things. For Lucid, it's going to actually give them $450 million. It's going to give them money to actually start paying stuff off, paying its debt, paying the revenue that it's received. It's probably making more revenue from likes of this than it has actually from selling cars and technology. So, for instance, the way that the payment set up, it's 232 million it's in combination of cash and shares, and then the other 222 million is for powertrain components. Now, powertrain is the technology behind its battery and its combustion engine. Okay, so it's done a deal to do too. Now, for Aston Martin, so let's have a quick look at Aston Martin. So Aston Martin, if we look at this, it's on an upward trend. Looks pretty decent. It's gone from $120 up to $347. But when you look at the bigger picture, it gives you a completely different analysis, a completely different story. We can see here that Aston Martin has been in an awful run. Look, luxury car maker has not done very well since here 2018. It was at $4,500 there or thereabouts, a little bit higher, just 4,548, and look, it's now dropped down to here, which is 347. So it's had an awful few years. Now, since the beginning of this year or September, it has slowly started to buck that trend. It has slowly started to turn. But Aston Martin and luxury cars haven't done well out of the pandemic, and then they've sort of started to put a bit of effort into sort of the EV market and jump in there. So this is why we've seen this sort of go on. Now, if we look at Aston Martin is not a company that doesn't do deals with our manufacturers. It has a deal with Mercedes to actually supply it with its electronics and its interior stuff like that there. So it has done these type of deals before, which have been pretty successful for Aston Martin over the years. So this looks like there's something that's going to happen. It's been announced yesterday, and we just have a quick look to see how it's going to affect them. Now, first thing I want to have a look at is their financials. So have a quick look at Lucid's financials, see what's going on, and see how it works. So if we look at the income statement here on the likes of it, we have a look here. The income statement is continuing to grow. It is continuing to grow, which is pretty decent, and that's what we want. Now, 2020 wasn't a good year for anyone, but we can see that there was a small drop off in 2019 and 2020. But as we can see, from 2021 to 2022, total revenue had a huge jump. Okay, balance sheets. So if we have a look then at the balance sheets, we go down here to total assets. So we can see from 2021 to 2022, the total assets has actually dropped. It's dropped quite significantly. Okay, so which is something that we need to sort of look at. Okay, now one of the other things then also we'll look at as the total liabilities. Now our total liabilities has dropped. Okay, it has dropped, which is something that it's helpful in that sense. Okay, now we look at current liabilities. Our current liabilities has gone up threefold. Our current liabilities is stuff that they pay off in the next 12 months. So that's something that's we have to sort of keep an eye on as well. So as a company, this hasn't made money. If we look at the earnings per share and the PE ratio, there is no P ratio because it hasn't been making money. It's hemorrhaging money. It makes about 1 billion a year and it hemorrhages about 2. Okay, so that's not something that's massively jumping under us. Now, so we're going to have a look at Aston Martin, and we expect Aston Martin to be a well-run company, something that is making money hand over fist. And again, it's not. Look, P ratio doesn't have a P ratio because it didn't earn any money last year. Okay, so again, we go down to the financials and we have a quick look. And the problem with car companies is that car companies have huge, what would I call it, sales, but then they only have a really small margin. They've only a really small margin on that, so which is horrible. Okay, but yes, we are slightly growing each year on the likes of this. So again, this is positive, the same as it was with Lucid. It's positive. It's going in the right direction. Now, if we have a look then at the balance sheet, and if we look here at the current assets, we have, yes, the current assets are slowly growing, but not significantly. Now, if we look at the total current liabilities, this is short-term debt. We have 1.0. Okay, so that's, yes, 1/3 of the current assets. But if we go down here to total liabilities, they're almost the same. So again, it's not one of these companies that is dripping with money. It's not one of these companies that is making money hand over fist. So all in all, do we think this is going to be helpful for both of these companies? Absolutely yes. Are both of these companies something that we want to get in and actually start investing in straight away? Now, in my opinion, no, it's not something that I would be absolutely chomping at the bit to invest in. Now, if we look at the likes of Aston Martin, we do have a nice little run. Since October last year, we have had a really nice run. Anyone who jumped in here, it's $88. It's now up at 348. You've had a nice little run on this particular market. It's gone up 308%. Now, in that time, you've had a nice little return on your investment. But what was the reasoning for jumping in there? What was the reason for jumping in there? Will this send the stock prices skyrocketing because they've signed this deal? No. Now, the idea of this is to actually have the next EV car out in 2025. Now, whether that will be late, whether that will be early, whether it be on time, whether the market will accept that, whether it's something that's a little bit of a flash in the pan, do we think this is good for both companies? Yes. Will it send the stocks skyrocketing? Probably not. Now, out of the two of these, the ones that will probably benefit more is Aston Martin, in my opinion, because it has the name, it has the reputation, but again, it's not a massively well-run company. So, in my opinion, if we were looking to trade this would have to come back to this area here. And if it came back to that area, then there is a potential buy as an underlying asset on this. But we have had a really good run on this, and is this the end of this good run? That is a $64 million question. Look, everyone, if you have enjoyed this, if this is something that you want to hear more on, give me a shout, subscribe to the channel, or just send me an email and I can go through this in detail for you. Okay, thank you. Bye-bye.